You ready?
We are ready.
Okay. Good afternoon, everyone. It's a lovely day, Saturday again. We are here on your financial house. So today we will be bringing you the rest of what life insurance is. Last week we did touch about life insurance, what it is and why it's important to have life insurance. This day we will tell you a little bit about group life insurance and what it is and what you need to know about group life insurance. And we'll be talking a little bit about debt as well. And so I will not keep you too long. We will go right into it and we'll bring Miss Trudy on and she will give us more information about group life insurance. And we will start right now. Hi,
Perfect.
Trudy. How are you?
I am fine, thank you, Avril. How are you doing today?
Doing well. It's cold and sunny, but it's okay.
It's beautiful outside, you're right, but it's
Yeah,
cold. So make
yeah,
sure that you are, properly closed.
that's
Absolutely.
right. That's right.
Absolutely. Yeah. So a lot of people, they would have seen our Facebook post with regards to that you may be paying for life insurance and you may not be aware. So we're going to get to that because that's
Mhm.
a huge point. But as we discussed, we wanted to talk a bit more about group life insurance because that is one thing that a lot of people tend to rely on, which they need to know more information on. So as usual, let me bring up my slides,
Yeah,
and we can definitely start going through that as well.
yeah.
Okay, so the question is, what is group life insurance? So and Avril, I know you've done your research too, so you can definitely chime in as we go through it together. So life
Yeah,
is life insurance that you get through your employer. All
yeah.
right. So normally when you get your contract from your employer, they may go down the list and you will get that it states there that you are entitled to group life insurance, and they'll give you the details and the nitty gritty on it as well. Okay.
Mhm.
What happens with group life insurance is that it's either your employer pays for it or the employee pays for it as well. So what may happen is that before you get your net salary, you may see a line stating, group life insurance, or it's going towards this each month, depending on the premium that you've agreed on as well. Right? It is essentially a term insurance. That's the type of insurance it is because it's only there for the time of your employment. And that's a big deal. What we're mentioning is there for your time of employment. All right. So once you have stopped working there, no longer working it, you don't have that insurance anymore. Okay. And what I've learned as well is that there are two types. There's employee basic life, and then there's also the dependent basic life. So you can also have insurance on your dependents as well with this group life insurance. Yeah. Was there anything you wanted to add here, Avril?
Yes, I also wanted to add that in most cases, the employee's company, who is the master policy holder, okay, and they select the type of insurance coverage, which may be either permanent or term insurance, as you
Mhm,
mentioned earlier.
mhm.
And the group life policy must contain a conversion provision that allows individual to insure members, like you mentioned,
Yeah.
to convert an individual plan without evidence of insurability. And most group conversions provision requires that the conversion may be to a whole life policy or opposed to a term policy. I guess you
Mhm.
mentioned all of this. I guess we're on the right track because we're saying
Yes,
the same
yes.
thing. And one of the rules they said on the conversion is that the death of the policy owner
Mhm.
and also the termination of the master policy and the disability of the policy owner. So these are some of the rules that apply to the conversion as well.
For the conversion as well. And
Yes.
you made a good point is as well, where you some companies allow it where you can purchase the policy from them essentially, so that you can have
Yeah. Yeah.
your own term life from
Yeah.
there after you left the employment. Okay,
Yeah.
so
Yes.
how does it work? So there is a monthly premium that you pay.
Mm-hmm.
So that's still the same. As I said, it's paid by either the employee or the employer, right?
Mhm.
What you find is the bigger the group, the less or the more, the cheaper the premiums.
Yes,
Right.
exactly.
Right. The premiums could be lower because you pay for the advantage of having a bigger group, basically, as well.
Mhm.
Okay. The death benefit is normally paid, based on the employee's earnings or a flat amount. So that's
Mhm.
something to note there.
Yeah.
Sometimes you may get 1 or 2 times your annual salary,
Yeah.
right? So if you're earning, say, 50,000 a year, sometimes you may be limited to 50,000 or 100,000. It depends on what your annual salary is at a specific time, right? Or it may be just that everyone is covered with 50,000 and that's it. And
Yeah.
that's it. Okay.
Yeah. And yeah, that's such good information there,
Yeah,
because
absolutely.
some persons, they will reach out to say that they have life insurance,
Mhm.
but they have it with a group,
That's
meaning
right.
that they get it at their
Employment.
workplace, and they don't see the importance of having their own life insurance.
Yes.
Okay.
Yes,
So,
that's right. That's right. And that's so important as well, right? And just a final point that I wanted to note here, the benefit of an employer having group life insurance for their employees is that it's a taxable benefit
yeah.
to the employer as
Hmm.
well. Okay.
Yeah.
Um, but yeah, you made a fantastic point about the size of the insurance that you normally get at group life, right?
Yeah.
The benefits received are not taxable. And this is
Yeah.
for any type of insurance. It's not taxable. It's once
Hmm.
it is in your beneficiary's name, it will not be taxable. Right. If you don't have a beneficiary, if it goes to your estate, there is a possibility that it can be, and that's something that you can talk more with a tax accountant, to find out a bit more details. But I found that quite interesting as well. So
Yeah.
a good point that you were getting to, Avril, there is group insurance enough? Is group life insurance enough? Right?
Yes. Yeah.
That's the question. So
Hmm.
is how I wanted to address this is by looking at a couple questions on
Yeah.
this as well. All right. So what happens if you leave that employment? What happens to your group life insurance when you
Hmm.
leave that employment? Right? Essentially, it's non-existent unless you decide that you're going to purchase it as well, right? Other than that, it ends. As your employment ends, your group life insurance ends as well.
Yes. And Julie, before you go further, I just wanted to make sure that everybody is hearing us
Mhm.
clearly, and they're hearing that important information that we're talking about when it comes to group life insurance, because it is very, very important. A lot of persons are out there, they are in a group life insurance, and they don't think that they need life insurance on its own or by
Yeah.
themselves, or individual life insurance. And I think it's important that they know that the group life insurance policy remains intact until the insurance parties are terminated or they leave the group.
That's right. That's right. That's very important to know there as well. All right. So the next question that I had there is, what happens if you fall ill or you're not been able to work? Do you still meet the requirements? Because that's
Mhm.
something that may be specific to the group life insurance that you're with. And that's why it's important to make sure that you read the details, speak to your HR, make sure that
Yeah,
they explain it to you so that you understand it. Because sometimes I know this jargon could be
too
over your
much.
head. Make sure you ask the question so you know what's going on. Because what can happen is if you fall ill and then
Mhm.
suddenly you haven't been able to work for a month, 2 months, something happens. Some require that you have to be, visible at work on the first of each month or something like that.
Mhm.
What can happen too is if you fall ill and you've been out for a number of time, it may be grounds for a dismissal. So suddenly you're out of work
What can
and
happen
your
to
life
you if you
insurance
fall
is
ill and you've been
gone.
out for a number of time? It may be grounds for a dismissal. So suddenly you're out of work. What can happen?
Getting an echo there. Yeah. So that's so important to make sure that you understand the conditions of your in your group life insurance policy. And Avril is going to come back and join us again shortly. Okay. Um, the next point is that what is the death benefit, and will it cover your debts provided for your family? Is it sufficient? If you have a mortgage, right? If your mortgage may be probably 400,000, and it's making its way down, but that's how much you have left on your mortgage, and the insurance that you're being covered for by your employment is probably only 200,000. Will that be enough? Don't you have other debt that you may want to cover as well, right? And so that's something that you need to consider as well. Will the death benefit from your group life insurance cover everything that you need? Right? So you need to look at your entire situation. If you have a mortgage, if you have, debt like credit card debt, final expenses that you want to pay, you may even want to be able to leave some funds for your family so that they can survive. Will that death benefit, from work be able to cover that as well? And that's important. Okay. All right.
Yeah, yeah.
And
Sorry,
simple
Truby.
answer to this, yes, that's the
Yeah,
only step. Go
yeah.
ahead.
Because basically, I got cut off a while ago, so I'm
No
so sorry
problem.
about that. So I just wanted to find out if everybody is hearing us clearly as well as I'm back on. Is everything okay? Yep.
Yep, I'm hearing you fine
Yeah.
on this as well.
Okay. Thank you.
All right. So the simple answer is usually it isn't enough. Group life insurance is usually not enough to meet your expenses when you're gone, and all the things that you may want to be able to provide your family, right? And so what essentially we advise people to do is look at group life insurance as a bonus,
Mm-hmm.
something extra. And as you mentioned before, make sure that you have your own personal life insurance in place,
Yeah.
right? If you get the group life insurance, fantastic. That's additional money, but don't
Yeah.
just depend on that alone. It's usually not sufficient. It's usually not sufficient.
And I would say that it's also there's advantages and disadvantages of the group life insurance, right? So it's the best.
Definitely, definitely. Make sure that you have your own personal life insurance.
Mhm.
Yeah. All right. So we're into the topic of what our Facebook post was about. Um, are you paying for life insurance and you may not even be aware of it? Okay. So as the heading makes point of, life insurance comes in different forms, right?
Mhm.
If you have ever had a call from somebody from the credit card department asking you if you want a balance protector, that's a form of life insurance. It's called creditors insurance. All right.
Mhm.
But I'm comparing it to life insurance because essentially, if you pass, if you die, what this insurance does is it makes sure that it's able to cover your balance. Okay,
Mhm.
so it is a form of life insurance. So what you'll hear the term normally referred to as balance protector.
Mhm.
Okay, if you go to a car dealership and you're doing financing and you're taking
Yeah.
a car loan, they are going to offer you life insurance. The term they normally use is the payment protection insurance.
Mhm.
They ask you, do you want this? It's only going to cost you this, and it makes sure that if anything happens, you can cover your loan. This is a type of life insurance, right? So it's added on to your monthly payments as well. If you have a line of credit, the banks may offer it as well, some kind of protection insurance as well. And finally, normally the biggest one is on your mortgage, creditor insurance, right? This is where, coming down to the end, the financing has been finalized and you have to get all the paperwork done. They're going to ask you, creditor insurance, do you have life insurance for your loan, right? And this is to make sure, right, that the lender is going to be covered as well. Okay, so these are all different types of life insurance. But what we want to go through with you is to show you why life insurance on a debt is not great. It's not great. Okay, so I want to explain to you what you need to know and understand about creditor insurance. Okay, so we're going to do a comparison because I think that's the best way to deal with it. Do a comparison between creditor insurance and term life insurance. And I want to try and make sure I keep it as simplistic as possible so everyone gets the point as well. That's very important. Okay. So with creditor insurance, the beneficiary is the lender. This is whoever you've borrowed the money from. They are the beneficiary. All right. They get the money back. That's the purpose of this credit insurance, to make sure that they get their money back. Okay. If you have your own personal life insurance, you choose the beneficiary, whether it be your spouse, your children, some charity, you decide who gets the insurance. Okay. So that's one thing. Usually with creditor insurance, it's more expensive. All right. It could come up to sometimes 2.8, 4.4% of your mortgage amount, the amount that you borrow. Okay. And often what you can do is you can go online. If you're borrowing from a bank, they would normally have the calculation there down on the side. So you can actually calculate how much your credit insurance is going to be. Okay. With term life insurance, it is cheaper. And this is something we dealt with when we compared the term life, the whole life, and the whole life, right? Term life insurance is cheaper and the premium remains the same for the term of the insurance. That's a big difference. Okay. Because what you find, and we're going to get back more into the credit insurance as well. With the creditor insurance, your balance is going down, but your premium remains the same. You're still paying the same amount, right? It just ends when if you no longer have the asset, if you no longer have the loan, if you paid it off, if you sold off your home, that's when, or you paid off the balance. That's when it ends, right? But that's a decreasing balance, but your premium remains the same. Okay, so what happens is, if, for example, you may have borrowed 400,000 for your home, and you probably are ready to sell it, or say perhaps you pass and you probably have 200,000 left in your home. That's how much the insurance company is going to pay to the lender, 200,000. Okay, so that means that premium that you're paying, that remains with the insurance company as well. Okay, let's go to the next point. It's not portable. If you get credit insurance one firm, if you decide that you're closing off that mortgage and you're going to get another one, you normally have to get another life insurance as well, or credit insurance at that point in time. And what you often find is that, of course, if it's 5 years later or 10 years later, you're older, the health is not as great, the premiums are going to be higher. That's just an understandable fact, right? With term life insurance, this goes wherever you go. It's your own personal life insurance, so it moves with you. So big difference there as well. Okay, and this is a big one, Avril. With credit insurance, and this is specific to the mortgage, what you find that it's a post-claim underwriting. Okay, what this means is that it's not until after someone has passed that they start to look at your medical history and see, all right, we've noticed this person, all right, there were signs of cancer, or they had a heart problem, or something like that, because you didn't take a medical. You don't do a medical when you get creditors insurance. So they only look at it after the fact. If there's any things that don't meet their conditions with your health, no insurance gets paid out. No insurance gets paid out. So your spouse might be thinking, yes, all right, at least we can pay for the home and we don't have to worry about it. But if that person's health, the policyholder's health was not great, there are chances that they may not get. It's not guaranteed. It's not guaranteed. And to me, that's something very scary.
It is so scary, actually, because what if somebody has cancer? So many illnesses out there, and if you were to have a heart surgery, you pass. Or if you had cancer, you pass. You have your family, and they are the ones you left behind. And you saying that they're not getting anything.
That's the possibility
because of your condition of your health.
Yeah.
So I guess that's very important for us to know, because before signing of to creditor insurance, it is important to read the fine print of all
Yes.
of those
Yes. That's
information
right.
before you put your name on this or you
That's
sign your life away, basically.
That's right. And again, the credit insurance may have its place, but this is a big deal because if you want something guaranteed, this is not the product for you as well. So with term life insurance, you're fully underwritten, right? What happens before they actually, provide you with the life insurance, they do a medical upfront, right? Once you meet that requirements at that point, if you continue with that policy, you are guaranteed to get that policy. There are certain terms and conditions, they want to wait 2 years for specific things, but you are guaranteed for that. They don't look at your health again later on just to see how it is. They base it on that time that they've done their checks as well. To me, this is the way to go. This is safer for you and well for your family, actually, the persons that you're left behind. So definitely this is a big difference that people need to consider when they're looking at getting credited insurance or term life insurance as well.
And you will sleep better at nights because you'll not
Oh
have
my
all that
goodness.
anxiety, and
Absolutely.
you will be better off.
Yeah,
You will
for
be
sure.
better off.
For sure. All right. So another point we want to bring up is the amount of your coverage reduces as your debt goes down, but your premium remains the same. And this is the point that I was alluding to before as well. Okay. So that's the point with the credit insurance. While your premium remains the same and the value of insurance remains the same. If you paid for 500,000, that's your premium. With term life, your family is going to get 500,000 at the end. Okay, with the credit insurance, as your debt goes down, the amount goes down as well, but your premium stays the same. Okay.
Okay.
So again, these are big differences that people need to take into consideration. The final point is that the creditors insurance on the mortgages. There's something called joint first to die coverage. Okay, what that means is when the banks or the credit insurance for the banks on mortgages, when they're looking at providing you with a mortgage, if you are doing a mortgage with two persons on it, so it's two people on it, they will provide you with a joint policy, basically. All right. So it's either a single policy or joint policy. So they will do it for a joint policy. And what happens is that the premiums you're paying is for two people. All right, you're paying for two people. But what happens is that you only get paid once, and it all depends on who dies first. So if the husband dies first, the insurance kicks in, it's paid, and that's it. There's no other payment coming out. That's it. That's the end of the insurance at that point in time. Okay. This again, as we saw, the insurance is already expensive. And yet you're just getting that one payment and that's it. With term life insurance, you get insurance for both the policyholder and the spouse. And normally you'd find that when you're able to combine it, because some insurance companies also combine the insurance, that you can get one policy per family as well. You pay for two and you get two. So if the husband passes, the beneficiary gets paid the 500,000. If the wife passes, again, that 500,000 is paid. So you pay for what you get, two for two, with the insurance, the term life insurance. So that's another big point that we want our listeners to make sure that they are aware of when comparing creditor insurance and term life insurance as well. That's a big one. Okay.
Yeah, I totally agree, Trudy,
Yeah.
because when you buy a policy, you need to know what you're paying for,
Absolutely.
how long it is going to last you,
Yeah.
and who is getting the final when
Yes.
you're gone.
Yeah.
That's the most important things as well.
Yep, you should have a decision on who is paid. You've been paying for this each month. Who's going to
Exactly.
pay for the permit? Exactly. So
Yeah.
just a couple of points that I wanted to just leave our audience with as well is to make sure that you get insurance that covers for your needs. Okay. And as we've seen, you can end up paying for life insurance on multiple products, on credit cards, on a car loan, on a line of credit, on a mortgage, when essentially you just need one. You just need one that covers everything. And usually, as you know, and this is what we grew up, as well, you buy in bulk, it's
You got
cheaper.
one.
That's right, it's cheaper. Absolutely, it's cheaper when you buy in bulk as well. So consider that. And the beauty of it as well is, even if some of our listeners or viewers are right now, they have creditors in insurance, look at it now. Let's discuss it. Talk to Avril and I. Let's discuss it. Let's see how we can help you, because it doesn't mean that you're tied to it either. You're not tied to it either. You can get out of it at any time. You could call the credit card company and say, listen, I don't think I don't need this. I don't need this. I have something else in place. And make sure that you look at all your loans, see if you're paying anything on there. Bulk it together, get one policy for yourself so that you're covered, right? What it means is that your beneficiary can then decide how everything is paid off, but you have that control. Your beneficiaries have that control as to how that debt is paid off as well. And they put it to where it's needed. Okay. Understand more about the conditions of your group life insurance plan.
Yeah.
And that's huge. Yeah. And what I'm going to do later, Avril, is in the chat, I'm going to put up, there's a video, and it was a couple years ago, about a teacher where he thought he was fine. He thought he was fine, and he checked it before he went off on sick leave. And then his wife tells us the story that they cannot claim anything.
Exactly.
Because they didn't understand the full details, or at least they weren't explained everything as well. So it's important to understand what your group life insurance plan is. And remember, group life insurance is a bonus.
Yes.
It is a bonus. Make sure you have your own personal life insurance. And this is not something that you have to pay a lot for either. Term life insurance is the cheapest. Make sure you have that, so you are guaranteed, your beneficiaries are guaranteed to get something as well.
Yep.
Okay. And finally, have one term life insurance and instead of multiple. It makes sense. It's more economical. Have one term life insurance policy rather than having multiple. You can end up saving money. This is money that you can save for probably a down payment for a home, or to start up your retirement plan, or you can invest that. And oh my goodness, there's so many options there. Have a look at your situation and see what it is. Absolutely. And that's what we're here for, so that we can sit down with you, so that we can go through it and see what you're paying for, so you can have a better understanding. Yeah. So
I totally agree, Trudy. I totally agree.
Absolutely. And so, as you said 2 weeks ago, Avril,
2 weeks ago,
and never need it than to need it and not have it. All right.
That's
so
right.
As we've seen through the past 3 weeks, life insurance it's an important, income protection is an important product to have. It absolutely is. All right. But just make sure that, it's what you need. All right. And that you have the right kind, and that you're not paying for multiple things in different places, but bring it down into one, so that you can save your money as well.
Yeah. Yes. So, ladies and gentlemen, if you have any questions, please put it in the chat. Show us all the love that you have been showing us for the past almost 3 months, 2 months?
It's 2 months now. Yeah.
2 months now? That's a long time now.
Absolutely.
Yeah, I want, if you have any questions to our audience, ladies and gentlemen, if you have any questions, put it in the chat. If you're looking at this presentation later on, and you know of someone who needs that information, please share that information. It will go a long way, and that person will thank you, for sharing that information with them. And I want to thank Trudy for every Saturday for 2 months now. She's given up her time, and she has given us, all the love and support when it comes to your financial house. So I want to say thank you to you, Trudy. Okay.
So
Before you
welcome.
go to this slide, can we show the other slide that we had before?
Sure.
Yeah, yes. Is life insurance worth it? We really want to tell you, well, to ask you that question. Ask yourself that question. Look at your family. See what they need. When you are not there or no longer there, or when you cannot bring that income in anymore,
Mhm.
do life insurance matters?
Yes.
So is it worth it? Ask yourself that question. It
So
is a love letter to your remaining ones, you know. So look deep within, search yourself, see if you need life insurance and is it worth it to you? What does it worth to you? And Trudy, if you have any last words, you'll let us know so we can basically close.
yes, absolutely. It's again, and I think the slide kind of said it all. Life insurance is something important. A lot of people think of it as, I'm going to waste my money. This is not money I get back. They think it's the same with home insurance and auto insurance. Yes, you spend the money, but you don't get back. And so that's why people start to look at different types of products like the whole life and the universal life, because with that, they can get some savings on the side and so forth. But there are better ways to do it. There are
Yes.
better ways to do it. Get the basic item that you need to make sure that your life is covered, and then you can save that extra money that you would have been putting to those other types of products. You can put across to savings and investments and get a
Mhm.
fantastic return. In that way, your family is better taken care for. And if you do survive and you don't need a life insurance, you have your investment that you've made, and which should be doing fantastic. Once you chat with us and we show you the fantastic ways you can do, get some great returns, that's the way to do it. Right? So is life insurance worth it? Yes, it is. I am able to go to sleep at night knowing that if anything happens to me, my husband and my kids are fine. Everything is in place. And I want that for every one of our viewers, anybody looking at this. I want them to be in a position where they're able to say, yes, everything is going to be fine with my family. And that's important. Thanks.
Thank you so much, Trudy. You've tied the knot right there. And ladies and gentlemen, you can reach Trudy on her Instagram and also on Facebook and through her email as well. You can reach her, and her information is there, and my information is there. If you need any questions answered, please let us know. Like I said before, ladies and gentlemen, thank you for being here and thank you for sharing this video, because somebody might need that information. You might not need it, but somebody else might need it. So it'll be good to share this information, and persons can get more aware of why life insurance is important. And this is Your Financial House with Avril and Trudy. And Trudy, I really want to thank you. I don't know how much to thank you so much for on
That's
today.
fine. I love doing this. Absolutely. This is important information, Avril. So no need to thank me. I'm just glad that we have people that appreciate the information. That's it.
Yes, yes. So far the comments are they even persons don't come and see the day, the time that we have in it,
Yeah,
but they look forward to seeing it when they relax in
absolutely.
their bed and before they go to bed or when they come from work, they
Absolutely.
relax, they're able to watch the videos. So I think that is a very, very good thing.
Yes, I want to give a special shout out to our girl Marie.
Yeah,
She's been an avid, supporter, and she views all our lives. Marie, thank you so much. It's so good
yeah.
to hear, your comments on that as well. Thank you.
Yes, yes. Fantastic job.
All right.
So we will close if no one has any questions. And you guys know where to reach us. You know how to find us. We're on Facebook. We're on Instagram. And Trudy will always be able to read her emails
Yes.
If you guys are having any questions or you're not so clear on something and you just want to verify something or you want to leave a comment on the videos, please do so. Let us know how we're doing, because we figure out, we are persons who we were once there. Right? We didn't have that information before,
That's a
right?
good point. Yeah.
And then now we are able to have that information and we can share it with you guys. So once again, ladies and gentlemen, thank you so much for
Yes.
being here with us on this Saturday.
Yes. Thank you,
Oh,
Marie.
Judy, thank you. I was just about to say, Marie.
That's awesome. That's awesome.
That's great. That's fantastic. That's fantastic.
All
Thank you,
right.
Marie.
All right. Thank you, guys. Thanks, everyone. Bye-bye.
Thanks everyone for watching. See you next Saturday at 2 o'clock. Don't forget, invite someone to this live, and I'm sure they're going to leave with something important, and they will probably have questions. So please don't forget to share the video.
Bye-bye.
Bye.